All right, get ready for your personalized deep dive into all those 2025 Canadian tax changes.
We'll be focusing on a recent report
From the Canadian Taxpayers Federation.
and really try to help you understand.
What these changes could mean for you and your wallet.
It's interesting how all these numbers on a page
Yeah,
can actually result in real-world impacts.
for sure.
So let's get into it, starting at the federal level.
Okay, so federal taxes.
Yeah.
The report says the average Canadian family is paying like a whopping 43% of their income in taxes.
That is correct.
Is that true?
That's right.
Wow.
But it's important to keep in mind
Yeah.
that this includes all taxes, income, sales, property,
Oh, okay, so everything.
everything. It just really highlights how much of our earnings go
Right.
towards funding those government services.
Makes sense, but in 2025, it sounds like it's going to get even more taxing.
Yes, especially when it comes to federal income-based taxes.
Okay.
Much of this is from increases in payroll taxes, like the Canada Pension Plan.
Right, the CPP. I've heard a bit about that. What's going on with that?
So both you and your employer
Okay.
will be paying more into CPP.
Okay.
If you're earning over $71,300,
Mm-hmm.
that's an extra $167 each
Whoa. Okay.
compared to last year.
Wow, that's a big chunk of change.
Yeah, and there's even more
Wait, hold on. There's more.
to this CPP increase.
Oh, my goodness.
Yeah, you've got CPP too.
CPP too.
Yes.
What?
It applies to income between $71,300 and $81,200.
Okay.
And the maximum you will pay for this portion in 2025
Yeah.
is $396.
Wow. Okay.
So if you are earning over $81,200,
Yeah.
be prepared
Yeah.
to see a combined CPP increase of about $375 in 2025.
Wow. That's a lot.
Yeah,
Right off the bat.
it is.
What about employment insurance?
So EI,
Yeah.
it's a bit of a mixed bag.
Okay.
The tax rate is actually decreasing slightly,
Okay.
but the maximum insurable earnings are going up.
Okay.
So for those earning $65,700 or more, you'll actually end up paying an extra $28.
Okay.
And your employer will contribute an additional $40.
Okay. So not a huge jump,
No.
but still an increase.
Yes.
Okay. Let's move on to something that's been making headlines.
Yeah.
The carbon tax.
Yes.
What's happening with that in 2025?
So the federal carbon tax is set to rise
Okay.
to $95 per ton on April 1st.
Okay.
This means an extra 3.3 cents per liter of gas,
Mm-hmm.
bringing the total carbon tax to 20.9 cents per liter.
Oh, wow.
Imagine filling up a 70-liter minivan.
Yeah.
That's almost $15 just in carbon tax.
Wow. And this is everyone across Canada.
Almost everyone.
Oh,
This
oh.
federal carbon tax
Yeah.
applies to all provinces and territories
Okay.
except Quebec,
Okay.
which has its own system.
Right.
Now, the government says that their carbon tax rebate will offset these costs
Okay.
and claims that families will actually be better off.
But I thought I saw in the report a parliamentary budget officer analysis
Right.
that tells a different story. Yeah, what does that say?
So the PBO estimates that even with the rebates,
Okay.
the average household will still be out of pocket
Oh, wow.
between $133 and $477
Oh, my goodness.
in 2025-26
Wow.
due to the carbon tax.
So much for being better off.
Right.
And then there's this whole carbon tax on tax thing.
Yes.
Can you explain that?
Yeah. So you're essentially being taxed twice on the same thing.
What?
Once for the carbon emissions,
Okay.
and then again on the carbon tax itself.
Through the GST.
Yes, through the GST.
Oh, my goodness.
The PBO projects
Yeah.
that this will cost Canadians a whopping $500 million
Wow.
in 2025-26.
It feels like we're getting hit at all angles here.
Right.
So we've covered payroll taxes,
Yes.
carbon tax.
Uh-huh.
What else is in store for us at the federal level?
Okay, well, there is a temporary sales tax holiday
Oh, okay.
on certain items,
Like what?
like pre-made groceries,
Okay.
children's clothing,
Okay.
drinks, and snacks.
All right.
This runs until February 5th.
Okay, so how much could a family potentially save with this?
So if they spend $2,000
Okay.
on eligible items, they could save up to $100 in GST.
Okay.
Plus, in provinces with the harmonized sales tax,
Yeah.
the provincial portion will also be removed.
Okay, so that's a welcome break.
It is.
But it's temporary.
Yes.
What about the long-term outlook?
Yeah.
The report mentioned something called the alcohol escalator tax.
Yes, the alcohol escalator tax.
What's that?
So it automatically increases the excise taxes
Okay.
on beer, wine, and spirits
Every year.
every year, in line with inflation.
So even if inflation cools down, our happy hour bills are still heating up.
Unfortunately, yes.
Oh, no.
In 2025, the increase is set at 2%,
Okay.
which is actually lower than previous years.
Oh, okay.
But remember, taxes already make up
Yeah.
about half the price of alcohol in Canada.
Wow, I had no idea it was that much.
Okay.
The report also mentioned changes to the capital gains tax.
Yes.
What's the deal with that?
This is a big one, especially for those with investments.
Yeah.
The government increased the inclusion rate
Mm-hmm.
on capital gains.
Oh.
So for individuals,
Yeah.
any gains above $250,000 are now taxed at 2/3,
Oh, wow.
up from 1/2 previously.
But isn't the government saying that this change will mainly affect high-income earners?
They are, yes.
Okay.
But economist Jack Mintz argues
Okay.
that this tax hike could have broader economic consequences.
Like what?
He predicts
Yeah.
that it could lead to a $127 billion decrease in Canada's capital stock,
Wow.
potentially resulting in 414,000 fewer jobs
Oh, my gosh.
and a nearly $90 billion drop in GDP.
That's a lot.
It is.
So it seems like this change is about more than just increasing tax revenue.
Yes.
Okay. Shifting gears to something a bit more digital.
Okay.
What's this about a new tax on
Right.
online streaming services?
So the CRTC is now requiring online streaming services
Right.
like Netflix and Disney Plus
Yeah, okay.
to contribute 5% of their Canadian revenues
So-
to support the Canadian broadcasting system.
Oh, so basically a tax to fund Canadian content.
Yes.
Okay. Will this affect what we pay for these services?
Well, the CRTC estimates
Yeah.
this will generate around $200 million per year.
Okay.
And yes, there are concerns that this cost
Yeah.
will be passed down to consumers
Yeah. Yeah.
through higher subscription fees.
That wouldn't be surprising.
No.
Is there anything else happening on the digital front?
Yes, we have the Digital Services Tax, or DST,
Okay.
which came into effect in June
Okay.
and is actually retroactive to 2022.
Retroactive. So companies are being taxed for past revenue.
That's right.
Wow.
The PBO estimates
Okay.
that this tax will cost taxpayers $1.2 billion
Wow.
in 2025-26.
Okay. And who does this target?
So it targets large online companies
Such as?
such as Amazon, Google, Facebook, Uber, and Airbnb.
Okay. But there's a catch.
There is a catch, yes.
Let me guess. Consumers end up footing the bill.
You guessed it. The PBO acknowledges
Yeah.
that these companies are likely to adjust their prices
Okay.
to account for the tax.
Right.
We've already seen this happen in France
Oh, really?
when they implemented a similar DST.
Yeah.
Amazon increased its commission fees
Yeah.
for French vendors.
It seems like every time a new tax is introduced, it ends up costing us more
Doesn't it?
in the long run.
It does seem that way.
Okay, so we've covered the federal changes.
Yes.
Now, before we look at what's happening in each province,
Yeah.
what are some key takeaways from all this?
I think it's crucial to understand
Yeah.
that these federal tax changes represent a pretty significant shift
Okay.
in how income is distributed,
Okay.
whether it's through payroll taxes,
Mhm.
carbon pricing, or digital service levies.
Right.
The government wants to generate more revenue,
Okay.
and they often cite goals like supporting social programs or addressing climate change.
Right. Right.
But it's also important to consider the potential economic consequences, like impacts on investment,
Yeah.
job creation,
Mm-hmm.
and ultimately consumer prices.
Right. So those federal changes will affect everyone across Canada.
They will.
But let's zoom in now
Yeah.
on how these changes are playing out in
Yeah.
each province.
Right.
Starting with beautiful British Columbia.
In BC, the carbon tax is a major factor.
Okay.
And like the federal carbon tax,
Yeah.
the provincial carbon tax is also increasing to $95 per ton on April 1st.
So what will that mean for people in BC at the pumps?
So the carbon tax on gas will rise to 21 cents per liter,
Okay.
while diesel will be hit with a 25 cents per liter tax.
Wow. Okay.
If you use natural gas for heating,
Yeah.
expect to pay an extra 18 cents per cubic meter.
Can you give us an idea of what that would look like in real life?
Sure, let's say a couple in BC
Yeah.
owns a minivan and a pickup truck.
Okay.
If they fill up their minivan once a week
Mm-hmm.
and their truck every 2 weeks,
Yeah.
it would cost them over $1,250.
In just carbon tax.
And carbon tax alone in 2025.
Wow.
And that doesn't even include the cost of natural gas for heating,
Right.
which
Right.
would add another $415 to their annual bill.
Oh my goodness. That's a lot of money just for carbon tax.
It is.
Now, what about this new home flipping tax I've heard about
Yes.
in BC?
Starting January 1st, 2025,
Okay.
this tax targets those who buy and sell properties
Okay.
within a short period.
Mm-hmm.
So the goal is to curb speculative buying
Okay.
and stabilize the housing market.
And how does that work?
So if you sell a property within 365 days of buying it,
Yeah.
you will be taxed 20% on the profit.
Okay.
That rate gradually decreases the longer you hold the property.
Okay.
And after 730 days,
Yeah.
the tax no longer applies.
Okay. Interesting
Yeah.
approach.
Yeah.
So that's BC.
Yes.
Now let's talk about Alberta.
Okay.
What's happening there in terms of tax changes?
So one notable change
Yeah.
is a new $200 annual tax on electric vehicles.
Really?
Yes.
Starting when?
Starting in January 2025.
That seems a bit counterintuitive,
It does.
given all this push for sustainable transportation.
Yeah.
What's the reasoning behind that?
So the Alberta government argues
Okay.
that this tax is necessary
Okay.
to ensure electric vehicle owners contribute their fair share to road maintenance,
Okay.
which has traditionally been funded through fuel taxes.
I see. I guess that makes sense from a certain perspective.
Yeah.
Is there anything else happening in Alberta?
So the CTF is calling on the Alberta government
Okay.
to make good on their election promise
Oh.
of an income tax reduction.
Oh, okay.
They specifically want to see the lowest tax bracket lowered
From
10% to 8%.
Okay. And how much could people in Alberta save if that happens?
So the CTF estimates
Yeah.
that this reduction could save working families approximately $1,500 per year.
Okay. So definitely something to watch for.
It is.
All right. Next up, we've got Saskatchewan.
Okay.
What's the tax outlook there?
So Saskatchewan has decided to hold the small business tax rate
At
at 1% instead of increasing it to 2% as planned.
Okay. So that's good news for small businesses.
It is good news, especially
Yeah.
since the rate was reduced to 0 during the pandemic.
Right.
So it's good news.
Great news for Saskatchewan's entrepreneurs.
It is.
What about personal income taxes? Any changes there?
Yes. The Saskatchewan government is increasing personal, sizeable child,
Mm-hmm.
and senior exemptions
Bye.
by $500 per year
Okay.
for the next 4 years.
And what does that mean for a family?
So this means a family of 4
Yeah.
could save $2,100 over that period.
Wow. Okay. And what about the carbon tax?
So they do have a carbon tax,
Okay.
but they're extending the exemption on home heating
For how long?
for another year.
Okay.
This will save the average Saskatchewan family
Yeah.
about $480 in 2025.
Sounds like there's some welcome relief there.
There is.
All right, moving east.
Yeah.
Let's talk about Manitoba.
Okay.
What's on the agenda for Manitobans in 2025?
So Manitoba could have a gas tax issue on their hands.
Okay.
They eliminated their 14 cents per liter gas tax
Right.
early 2024
Okay.
and extended the cut through the end of the year.
Yeah.
However,
Yeah.
as it stands,
Mm-hmm.
that tax is set to return on January 1st, 2025.
Oh, no. So how much could that cost people in Manitoba?
Okay, so a 2-vehicle family
Yeah.
that fills up both a minivan and a pickup truck every 2 weeks
Mm-hmm.
would have saved around $587 by the end of 2024,
Okay.
thanks to the gas tax cut.
Right.
But if that tax comes back,
Yeah.
it would cost them about $734
Just in gas tax.
in gas taxes throughout 2025.
Is there any talk of extending the gas tax cut further?
The CTF is pushing for another 3-month extension,
Okay.
which would save that same family an additional $147.
Okay.
We'll have to see
Yeah.
if the government takes action on that.
Fingers crossed.
Yeah.
What else is happening in Manitoba on the tax front?
So they're changing their education property tax.
Okay.
They're replacing the 50% school property tax rebate with a $1,500 tax credit for principal residences.
Okay, will that affect everyone equally?
Not necessarily.
Okay.
It depends on the value of your home.
Okay.
Some homeowners
Yeah,
could actually see their property taxes increase.
as a result of this change.
Yes.
Interesting. Okay, anything else Manitobans should be aware of?
Yes.
What's that?
They're increasing taxes for those with higher incomes.
Oh, okay, how so?
The basic personal amount is being phased out
For who?
for those with incomes over $200,000.
Okay.
And it's completely gone
For
for those earning over $400,000.
wow, so a mixed bag for Manitobans.
Yes, it is.
All right, let's head to Ontario.
Okay.
Canada's most populous province.
Yes.
What's in store for Ontarians in 2025?
So first, the good news.
Okay, good news.
The gas tax cut,
Yeah.
in effect since July 2022,
Okay.
is being extended through June 30th, 2025.
So that means?
This means the average 2-car family
Yeah.
will continue to save $210
Okay.
during the first half of the year
That's a welcome reprieve.
It is.
But the report also mentioned something called bracket creep.
Yes. Bracket creep.
What's that all about?
So it's a way taxes can increase without any official tax hikes.
What?
It happens when income tax brackets aren't adjusted for inflation.
So you're saying that even if you get a raise
Yes.
that matches inflation,
Yes.
you could end up paying a larger portion of your income in taxes?
That is correct.
Wow, so you end up paying more in taxes,
Yes.
even though you're not actually better off financially.
Yes.
Oh my goodness. And in Ontario, the top 2 tax brackets aren't indexed to inflation.
No, they're not.
So those in those brackets, as
Yeah.
well as people receiving the low-income individuals and families tax credit or lift,
Yes.
are particularly susceptible to bracket creep.
Yes, as that's also not adjusted for inflation.
So bracket creep is definitely something Ontarians need to watch out for.
Yes.
Is there anything else adding to the tax burden in Ontario?
Unfortunately, yes.
Oh no, what's that?
So bracket creep also affects the Ontario Health Premium, or OHP,
Okay.
which is automatically deducted from the wages of anyone earning over $20,000 per year.
Okay, and what's wrong with that?
So the thresholds for the OHP haven't been adjusted for inflation
Since when?
since it was introduced back in 2004.
Oh wow, so even if you're only earning a modest income,
Yes.
you could still be affected by bracket creep through the OHP.
Exactly.
Wow, can you give me an example?
Sure, a taxpayer earning $60,000
Okay.
will pay $600 in OHP premiums in 2025.
Okay.
And that amount will increase
Yeah.
as their income rises with inflation.
Even though their actual purchasing power hasn't changed.
That's right.
All right, let's move on to Quebec.
Okay.
What's happening there in terms of tax changes?
So Quebec has its own pension plan,
Right.
the Quebec Pension Plan, or QPP,
Yeah.
and they're increasing the contribution rates in 2025.
Okay, so what does that mean for people?
So this means both employees and employers will be paying an extra $192 each.
Okay, so similar to the CPP increases we talked about,
Yes.
but specific to Quebec.
Exactly.
What about employment insurance in Quebec?
So Quebec Employment Insurance, or EI,
Yep.
is seeing a slight decrease in the tax rate,
Okay.
but the maximum insurable earnings are going up.
Okay, and so what does that mean for Quebecers?
This means employees will be paying an extra $26,
Okay.
while employers contribute an additional $37.
Okay. What about the carbon tax situation in Quebec?
Yeah.
They have their own system, right?
They do,
How's
yes.
it looking like?
And the good news is
Okay, good news.
their carbon tax is actually decreasing slightly in 2025.
Okay.
Filling up a minivan will cost about $8,
All right.
less than in many other provinces.
That is good news. Any other, notable tax changes for Quebec residents?
So there's some significant increases in car registration fees
Where?
in both Montreal and Quebec City.
How much were we talking?
So in Montreal,
Yeah.
car registration fees are going from $59 to $150 per vehicle.
That's a huge increase.
It is. It's a 154% increase.
Wow. So a family with 2 cars
Yes.
will now be paying what?
They'll be paying $300 per year,
Up from...
up from $118.
Wow, that's a big jump. What about Quebec City?
In Quebec City, the increase is even steeper.
Oh.
Fees are going from $30 to $90 per vehicle,
Which is a
200% increase.
So a 2-vehicle family will now be paying $180.
Annually, up from $60.
Wow.
Yeah,
It sounds like driving is about to get a lot more expensive in those cities.
it certainly seems that way.
Yeah.
It highlights how tax changes can happen at all levels of government,
Right.
federal, provincial, and even municipal.
That's a good point. It's important to be aware of all the potential changes
Yes.
that could impact your finances.
Absolutely.
Okay, so we've covered a lot of ground with those federal and provincial changes.
We have.
It seems like every province is taking its own approach. Some are focusing on relief,
Yeah.
and others on generating revenue.
Right.
It's a lot to keep track of.
It is.
But speaking of keeping track, this deep dive wouldn't be complete
Right.
without addressing the elephant in the room.
Yeah. Inflation.
Ah, yes, inflation, the silent tax.
Right.
Eroding purchasing power and making it harder for Canadians
Yeah.
to make ends meet.
For sure.
And as we've seen, it plays a significant role
Yeah.
in how these tax changes
Yeah.
will ultimately impact your wallet.
For sure. Even if your income stays the same,
Yeah.
inflation can push you
Oh,
into a higher tax bracket.
Right.
meaning you're paying more in taxes even though you can't afford to buy more.
Yeah. It's a sneaky way for governments to increase revenue without technically raising tax rates.
Exactly. So as we head into 2025, it's important to factor inflation into your financial planning.
Yeah.
Don't assume that a salary increase will automatically translate into more spending power.
Exactly. You need to consider the combined impact of inflation and taxes.
To get a true picture of your financial situation.
Okay, so we've covered the feds. So we've covered BC, Alberta, Saskatchewan, Manitoba, and Ontario.
We have.
What about the Atlantic provinces?
Yeah, let's head over to the Atlantic provinces.
Okay, let's start with Nova Scotia.
Okay.
They're cutting the HST.
Yes.
And eliminating bracket creep.
Yes, they are.
That's great news for Nova Scotians.
It is good news.
Yeah.
So the 1% HST reduction starts on April 1st.
Okay.
And will save the average household over $350 annually.
Wow.
And then we have the elimination of bracket creep.
Yeah.
So Nova Scotians won't be unfairly pushed into higher tax brackets just because of inflation.
So a double win for Nova Scotia?
It is.
What about New Brunswick?
So New Brunswick's new premier, Susan Holt, has pledged to eliminate the 10% provincial sales tax on power bills.
That sounds like a significant change.
It is.
When can New Brunswickers expect to see that?
So it hasn't been officially passed into law yet, but Premier Holt aims to fast-track the bill.
Okay.
So it could take effect at the beginning of the 2025-26 fiscal year.
So potentially some immediate relief on electricity costs for New Brunswick residents.
Yes.
Okay, what about Newfoundland and Labrador?
So Newfoundland and Labrador is extending its gas tax cut.
Until
March 31st, 2025.
Okay.
This cut saves taxpayers 8 cents per liter of gasoline and 7 cents per liter of diesel.
How much has that saved taxpayers so far?
So by the time the extension ends, it's estimated to have saved taxpayers a total of $150 million.
Wow, that's a lot.
Yeah.
All right, our last stop on this cross-Canada tax tour is Prince Edward Island.
All right.
What's the tax situation looking like there?
Prince Edward Island has a bit of a mixed bag.
Oh, okay.
When it comes to income tax changes.
In what way?
So they have some small tax cuts for those earning less than $105,000.
Okay.
But they haven't addressed bracket creep.
So some islanders will benefit from tax cuts.
Yes.
While others will be hit by bracket creep.
That's right.
And as we discussed, bracket creep can be a silent tax increase.
It is.
So it's something everyone needs to be aware of.
For sure.
So that wraps up our whirlwind tour of 2025 Canadian tax changes from coast to coast.
It does.
It's been quite a journey.
It has.
So what are some of the biggest takeaways for our listeners?
So I think the most important thing is to remember
that
taxes are constantly changing.
Yeah.
We've seen a whole spectrum of changes across Canada.
Right.
From increases in carbon taxes to income tax cuts to new taxes on digital services.
Right.
It's more important than ever to stay informed about these changes.
Yeah.
And how they could impact your personal finances.
Absolutely. Knowledge is power.
It is.
Especially when it comes to taxes.
For sure.
It's not enough to just passively accept these changes.
Right.
We need to understand them, analyze them, and even challenge them if necessary.
Absolutely. And beyond just understanding your own tax situation, I think it's also important to consider the bigger picture.
Right.
What are the economic and social consequences of these changes?
Yeah. What impact will they have on businesses, consumer behavior, and government revenue?
Exactly.
Yeah, these are important questions to think about.
Yeah.
It's not just about the numbers on our tax returns. It's about the broader impact these changes have on society as a whole.
Yes.
So as we head into 2025, what's one key piece of advice you would give to our listeners?
I would say don't be afraid to ask questions.
Yeah.
If you're unsure about how a particular tax change will affect you, reach out to a financial advisor or tax professional. They can help you navigate the complexities of the tax system and develop a plan.
That's tailored to your individual needs and goals.
Exactly.
That's great advice. And don't forget, the Canadian Taxpayers Federation website has tons of resources on these changes, including detailed breakdowns by province and income level.
That's a great resource for anyone looking to dig deeper into these changes.
And don't hesitate to reach out to your elected officials to express your concerns.
Right.
Or ask questions about specific tax policies.
Exactly. Your voice matters.
It does.
In shaping the tax landscape.
Absolutely. It's our responsibility as taxpayers to stay informed and engaged in these conversations.
Well said. And on that note, I think it's time to wrap up this deep dive.
I agree. We've covered a lot of ground today.
We have.
And I hope our listeners feel more informed and empowered to navigate the 2025 tax season.
Absolutely.
Remember, staying informed
is
the first step towards taking control of your finances.
It is.
We encourage you to explore the resources we mentioned earlier and continue to stay engaged in the conversations shaping our tax policies. And as always, if you have any questions or topics you'd like us to explore in future deep dives, please don't hesitate to reach out.
Absolutely.
Thanks for joining us.
Thanks, everyone.
And until next time, stay curious. Okay, so we've covered the feds.
We have.
We've covered BC, Alberta, Saskatchewan, Manitoba, and Ontario.
Yes, we have.
What about the Atlantic provinces?
Yeah, let's head over to the Atlantic provinces.
Okay, let's start with Nova Scotia.
Okay.
They're cutting the HST.
Yes.
And eliminating bracket creep.
They are.
That's great news for Nova Scotians.
It is.
Right.
It is good news, yes.
So the 1% HST reduction starts on April 1st.
It does.
And will save the average household over $350 annually.
Annually, that's right.
Wow, that's fantastic.
It is. And then on top of that, we have the elimination of bracket creep.
Right.
So Nova Scotians won't be unfairly pushed into higher tax brackets.
Just because of inflation.
Exactly.
So a double win for Nova Scotia.
A double.
What about New Brunswick?
So New Brunswick's new premier, Susan Holt, has pledged to eliminate the 10% provincial sales tax on power bills.
Okay, that sounds like a significant change.
Yes, it is.
When can New Brunswickers expect to see that happen?
So it hasn't officially been passed into law yet.
Okay.
But Premier Holt wants to fast-track this bill.
So it takes effect.
Yeah. Hopefully right at the beginning
of
the 2025-26 fiscal year.
So potentially some immediate relief.
Potentially.
On electricity costs for New Brunswick residents.
That's right.
Okay, what about Newfoundland and Labrador?
So Newfoundland and Labrador are extending their gas tax cut.
Until when?
Until March 31st, 2025.
Okay.
This cut will save taxpayers 8 cents per liter of gasoline and 7 cents per liter of diesel.
Okay, and how much has that saved taxpayers so far?
By the time that extension ends, it's estimated to have saved taxpayers a total of $150 million.
Wow, that's amazing.
It is.
All right, so our last stop on this cross-Canada tax tour is Prince Edward Island.
Okay.
What's the tax situation looking like there?
Prince Edward Island has a bit of a mixed bag when it comes to income tax changes.
Okay, in what way?
So they do have some small tax cuts for those earning under $105,000.
Okay.
But they have not addressed bracket creep.
Okay, so some islanders will benefit from tax cuts?
They will, yes.
While others will be hit by bracket creep.
That's right.
And as we've discussed, bracket creep
yes.
can be a silent tax increase.
It is.
It's something everyone needs to be aware of.
For sure.
So that wraps up our whirlwind tour.
It does.
Of 2025 Canadian tax changes.
Yes.
From coast to coast.
Coast to coast.
It's been quite a journey.
It really has.
What are some of the biggest takeaways for our listeners?
The most important thing to remember
Yeah.
is that taxes are constantly changing.
They are.
We've seen a whole spectrum of changes across Canada.
Yeah, like
from increases to carbon taxes,
right.
to income tax cuts,
right.
to new taxes on digital services.
Right.
Yeah. So it's more important than ever to stay informed about how these changes could impact your personal finances.
Absolutely. Knowledge is power, right?
It is.
Especially when it comes to taxes.
For sure.
It's not enough to just passively accept these changes.
Right.
We need to understand them.
Yes.
Analyze them. And even challenge them when needed.
I agree. And beyond just understanding your own tax situation.
Yeah.
You know, I think it's also important to think about the bigger picture.
For sure.
Like, what are the economic and social consequences of these changes?
Right. What impact will they have on businesses, consumer behavior, government revenue? Yeah, these are all important questions to ask.
They are.
You know, it's not just about the numbers on our tax returns.
Yeah.
It's about, you know, the impact on society as a whole.
The broader impact, yes.
So as we head into 2025, what's one key piece of advice?
One key piece of advice
you would give to our listeners?
Don't be afraid to ask questions.
Yeah.
If you are unsure about how a particular tax change might affect you, reach out to a financial advisor or a tax professional.
Okay.
They can help you navigate the complexities of the tax system and develop a plan that is tailored to your individual needs and goals.
That's great advice. And don't forget the Canadian Taxpayers Federation website.
Yes, a great resource.
It has tons of great resources, including breakdowns by province and an income level.
For sure. And, don't hesitate to reach out to your elected officials to express your concerns or ask any questions you might have about specific tax policies.
Right. Your voice matters.
It does.
In shaping the tax landscape.
Absolutely. It's our responsibility as taxpayers.
It is.
To stay informed and engaged in these conversations.
Well said. And on that note, I think it's time to wrap up.
Yeah, I think so too.
This deep dive.
A lot to unpack.
We've covered a lot of ground today.
We have.
And I hope our listeners feel more informed and empowered to navigate the 2025 tax season.
Absolutely.
Remember, staying informed is the first step
It
towards taking control of your finances.
Absolutely.
We encourage you to explore all those resources we've mentioned.
Yes.
And continue to stay engaged in the conversations shaping our tax policies.
For sure.
And as always, if you have any questions or topics you'd like us to explore in the future, please don't hesitate to reach out.
Absolutely.
Thanks for joining us, and until next time, stay curious.
Thanks, everyone.